potentially living in poverty. So more and more people are feeling that squeeze, and more people who are in work are feeling that squeeze, and that's really significant. We can understand it, and there's lots of conversations around people on benefits that potentially may struggle, but these are people who are going out to work and are still finding it very, very difficult. And with the current cost of living squeeze, this is not going to get better, it's going to get worse. And again, this is where James and this evening's presentation is going to help and support that process. Okay. And here we go. We're going to do our first Mentimeter. So for those who've never used the Mentimeter, I am going to pass you on to my colleague, Theodora, who's going to explain what's going to happen next. So Theodora, can I invite you along to explain to everyone how they can play a part in the poll that is about to follow?
Yes, Paul, thank you so much. Good evening, everyone. My name is Theodora, and I'm one of the branch ambassadors for the CIPD Manchester branch. So tonight we've got a financial well-being poll that would like you to join, and you can answer the poll either by scanning the QR code, and you can do so by opening your phone camera, or you can join it by going to menti.com and entering the code on the screen. So, considering the financial well-being of your employees since the beginning of the pandemic, considering the economical lockdowns and the carer responsibilities that colleagues had to take, what percentage of people in the UK do you think currently in work are in poverty? Right, so I can see some are voting for 5%, 10%. I can see that the great majority of you are voting 12.5%, 10%, 12.5%. Right, we'll leave it a few more minutes. Right. Paul, could we please send the code again? There are some of us who couldn't vote.
Yep.
Thank you.
Can people see that? Hopefully you can play a part. So again, if you use your mobile phone, if you've got that with you and to hand, and you've got a signal, because I know mine personally is currently on airplane mode, so I won't be able to take part at this moment in time. But if you switch your phone on, if you use the camera and hover over the QR code, that should activate the Menti poll. Alternatively, again, you can use this on your phone through your search engine, put in www.menti.com and that code, and it will take you immediately to the poll, and then you can vote and play a part in what's to follow. So I'll go back to the slide. I'll leave that for literally 30 seconds so people who have not yet had the opportunity to vote can play a part. And we'll move back to the poll. Okay.
Right, so I can see that the great majority of you voted for 12.5%, followed by 10%. The correct answer, according to the latest CIPD report on financial well-being, is 12.5%. Right, back to you, Paul.
Thank you. Yeah, and what's interesting is I'm really pleased that the majority of the people are coming in and around what that figure is. It's approximately 1 in 8 people in work are in poverty, which is really, from my perspective, really damning and very surprising. But the fact is that the majority of people who took part have gone at least above 10%. Nobody has gone to 2.5%. So everybody feels that there's a significant part of their workforce that may well be suffering as a consequence. not just of the current impact of the cost of living, but potentially what's to come. And again, there was publications today following the spring statement that suggest that that could move to as much as 20% in the next 12 months, based on the squeeze on fuel, on gas, on food shopping, that it could move to as much as 1 in 5 of people in work suffering poverty, which is a really damning number for our society. And it's incumbent on all of us to try and work on ways and means to bring that number down and mitigate the impact of some of the things that are taking place in the general economy. So without further ado, I'm going to pass you on to someone who's a bit more expert on this than I am, James, who I'm going to leave to introduce himself and to take us through tonight's presentation. So thank you, James.
Great. Thanks a lot, Paul. Really appreciate it. And just before I start, just wanted to say a big thank you to Paul and Rebecca and all the ambassadors and committee members that I've spoken to over the last few weeks who've done all the preparation for today. A lot of work goes into that, all the LinkedIn and Twitter sessions that have gone out on the internet and organised for people to register and join the session today. So really do appreciate that. What I'm going to do today is there's a slide deck, and as Paul said earlier on, Rebecca said earlier on, the slide deck is shareable and it's designed to be shareable. So if you want to get a copy of that, then obviously that is available. Please take notes as you go along, but all the links that I'm going to talk about, all the information, I'm quite a visual person, is in the slide deck that we're going to provide to you today. And the content of what we're talking about has been following feedback from probably about a dozen CIPD members right across the Manchester and Greater Manchester and North West region. I appreciate that there's a number of you are on the call today that I already have a really good relationship with. I know that there's Claire Calman on the call and Amy Lee and Lucy Doherty from Auto Trader, who I'm actually speaking to Lucy tomorrow and her team at Auto Trader. So for some of you, there might be some information or some content that you've already seen. But there definitely will be some new information and content because some of what we've going to talk about today will literally have been released in the last 24 hours. It's literally gone live in the last 24 hours. And therefore, what I would say is, in terms of that new information, I'll give you as much as I possibly can. A lot of that new information is about what we're calling our Finding Your Way Forward campaign, which later in the deck I'll go through in a bit more detail, but really is about what Paul was talking about, all these challenges in terms of financially and economically on people and households and employees, in terms of rising fuel costs, rising living costs, council tax, gas, water, electricity, whatever the charges and bills may be. So I've structured the deck today and the content so that not only those that I'm engaged with already, but those of you who've not met me before or not engaged significantly with the Money and Pension Service before can take away the content in its entirety. One of the things I would say right at the end of the deck, there's my contact details. For those of you that work for organisations that you think would like to work more closely with us or have a one-on-one session, as I've had with the three ladies I've just mentioned there, or with Paul in the past, or there's other organisations, we're very happy to do that. And I'll explain the kind of organisations that we do lots of work with in a moment. So that's just kind of how we've arrived at today. And a big thank you before we get going really to all the hard work that's gone to get this session set up today from the CIPD side. So what I wanted to do just before we go into the deck is just really just explain into detail the deck, just really explain a little bit more about the Money and Pension Service and about my role and how I help support employers and partner organisations right across Manchester and the wider northwest of England. So Paul, can we just jump on to slide number 2, please? Super, thank you. So, Money and Pension Service, that's quite a long mouthful of a title, and so we tend to call ourselves MAPS. We just abbreviate it down to the Money and Pension Service. And just for clarity, who are we? What do we do? So the Money and Pension Service, we're an arm's length government department. So head office for us is in Holborn in central London. We have about 370 colleagues based across the whole of the UK. And we have colleagues in every region and every part of the UK, including the devolved nations. So in Wales, Scotland, Northern Ireland, obviously in England, and then in all the 9 major regions of the UK. My role is I'm the Regional Partnership Manager for the Money and Pension Service in the North West. And we use the government definition of what the North West is. So for us, that means all the organisations and people who are based within Greater Manchester, Liverpool City region, including the Wirral and Merseyside, East and West Cheshire, East and West Lancashire, and Cumbria, including the Lake District. So if your organisation is based in those areas, then it's very likely that it's me that you will deal with most of the time. I lead out our engagement with what we call partner organisations. So partner organisations can be across a real wide selection of sectors. So we do lots of work in the public sector. We'll work with other government departments. We'll work with councils. We'll work with organisations like housing associations that very often work very closely with councils or credit unions. We also work in the private sector, so we'll engage with, for example, here in the Northwest and on a national basis, I look after our relationship with Jaguar Land Rover. So Jaguar Land Rover have nearly 5,000 people based at Halewood operations, building the Evoque and the Discovery on the south side of Liverpool, and I look after how Money and Pension Service engages with them and all the engagement and support that we provide to all of their colleagues. And then we'll also engage with lots of other different types of organisations. So we'll engage with member organisations. So for example, most of you will know that the biggest kind of member society in the UK is Co-op Group. Head office is in Angel Square here in Manchester, just down the road. So I look after our relationship with Co-op Group and all its divisions, whether that's funeral care, whether that's the retail stores, whether that's the distribution centres, whatever it may be. And there's 70,000 employees that work for Co-op Group right across the whole of the UK. And then we'll work with what we call charitable organisations, partner organisations, some of which you will probably know. So we work very closely with people like Citizens Advice, who are on most high streets across the country. We'll also work with other charities who work really closely in that kind of debt and money space. So we work, for example, with Step Change Debt Charity, who have big offices here in the Northwest in Chester. And then we'll work with other organisations that are specialists in their area. For example, we work with Shelter on the housing side. Shelter has been going about 40 years, and most people acknowledge that in this country they're the leading kind of housing charity in the UK. So we work really closely with those kind of organisations and all the partner organisations that I've just talked about. And what do we do? So our role here really is to try and help people get the best guidance, the best information they can make to get effective financial decisions throughout their lifetime, and the journey, the financial journey that they'll go throughout their lifetime, from starting in work, and probably in their teens and their 20s, through their 30s, their 40s, their 50s and 60s, and into retirement. And one of the things that we do, because the Money and Pension Service is quite a mouthful, we have a website, and we've existed in one form or another for about a decade and a half. But we've actually rebranded our website last year. And one of the things that Paul and Rebecca and other members and ambassadors were very keen on me doing today was demonstrating some elements of Money Helper, which I'm going to do a little bit later in the deck. So Money Helper is our website. We deliberately use that, that name rather than Money and Pension Service, just simply because it's a little bit easier on people's lips. It's a little bit easier for people to understand. And when we did the market research before we rebranded that website in the summer of last year, what we found from market research is that when people come and talk to us, when they engage with us, whether that's consumers, whether that's employers, whether that's HR or people professionals, whoever it may be, they're tending to come to us because they have a money query, whether that's about financial well-being, which we're going to spend a lot of time talking about today, whether that's about financial education, whether that's about their pensions, and they tend to need help. And we just wanted to simplify down how we really branded ourselves in terms of that website. One of the things you'll find about that website, and when we talk about it today, that I try and be really clear about from the start, is everything that we provide on that website is provided for free, and it's independent, totally independent. We're not a comparison site. We're not like Money Saving Expert or Compare the Market. Our job is not to kind of sell a product or sell a service or encourage somebody to go to a particular provider. Our job is to give free, independent advice that people can have trust in and belief in, and know that we're trying to help them make the best decision that they possibly can. And the other thing I'd say to you before we get going is one of the things that we do here at the Money and Pension Service is we talk to people in a probably a little bit more straightforward way than perhaps a lot of banks and building societies do, certainly than perhaps some other government departments do. We have a big focus on trying to talk to people in a really straightforward way when we talk about money and talk about money issues, and we actually use the phrase talk money because that's part of what we believe in. We're not trying to make money this really technical, complex subject that people struggle to understand. So we don't talk in financial services jargon. We try and demystify money and make sure that when we engage with people, it's in a really easy to engage way. That might be through the content that we're going to look at today, but we also use things, we're really big on using LinkedIn and Twitter, which a lot of government departments just don't really do to the same extent. We'll use Facebook, so we'll use lots of social media. We'll use things like videos, and if you look at our videos, they're very conversational in style, really straightforward to deal with and engage with. And even the way we present ourselves, before I joined MAPS, I've worked for MAPS for the last 3 years. I used to work for a long time for Lloyds Banking Group and Halifax Bank, helping customers who are struggling or in financial difficulty. So in a very similar role to the role that I work with in here. And I actually used to work with MAPS, but for Lloyds Bank. But Lloyds are a great organisation, but when they present to people, they tend to present internally in quite a formal way. When I came to MAPS, I don't wear my suit quite as much as I used to. I don't tend to just have a suit and tie on every day. So we're not trying to present ourselves in a very, very formal way. We're trying to have more of a conversation about money, build people's empowerment, build people's confidence, and help them make really effective decisions. And just before we move on from that slide, just to show you the other departments that we work with, we engage really closely with, and we're sponsored by the Department for Work and Pensions. One of the things I like to say from the get-go is we don't step on their toes. And what I mean by that is we don't distribute or pay benefits. That's DWP's job, and they're one of the biggest government departments in the UK, and that's their role. We don't step on their toes. We might give information about benefits, but we don't pay them. And we work pretty closely with HM Treasury and Cabinet Office for obvious reasons, and that they control a lot of the financial matters across the UK, both for employers, for employees, for consumers. Paul, can we just move on one more, please? So I mentioned earlier on, I know Paul mentioned earlier on, and the other ambassadors in the build-up and the lead to starting today, about financial well-being. And one of the things that we're really big on is the support of financial well-being and transforming well-being and financial well-being. And what we mean by that is improving people's financial well-being consistently, not just for the short term, but for the medium and for the long term, and in a structured way. So today, I'm not going to spend a lot of time on talking about strategy and the strategy behind financial well-being, because that's something I tend to do on an individual basis with each organisation in terms of the support that they want from us and the input that they might want from us. And that's one of the things that when I have a discussion one-on-one with an organisation or some of the people that are on the call today, and that's something that we discuss. But financial well-being as a concept has really got a lot more traffic and a lot more understanding over the last 2 to 3 years. But when I first joined MAPS, I did find, perhaps if you wind the clock back to 2019, that financial well-being was on people's radars, but it wasn't right up there. It was kind of perhaps somewhere in the middle. It wasn't at the bottom, but for a lot of organisations, a lot of employers, a lot of HR professionals, it was somewhere in the middle. Now, during the pandemic, from kind of spring 2020, it's 2 years later now, financial well-being has just consistently risen up the agenda and stayed towards the top of the agenda. One of the reasons Paul was very keen for me to join the session today, that you had booked in today, was there's lots of pressures that have come out of the pandemic, lots of financial pressures that have been placed on people, on employers, on individuals, on households. People have lost hours, they might have lost income, some people have lost their roles, unfortunately. And then that's been added to by the additional pressures that we've been really seeing over this winter, and particularly since the Russian-Ukraine war kind of kicked off 3 or 4 weeks ago, in terms of those additional pressures on international prices of commodities like oil, like grain, like food, that are putting these kind of really big inflationary financial pressures on families. So when I say we're about transforming financial wellbeing in the UK, what we want to do is provide organisations and people and consumers with the right levels of support that help them through key aspects of the journey. And that support might be different for different organisations. It might be different for people throughout the journey of their lives. The demand that we tend to have for people who are perhaps in their 20s is going to be very different to people who are preparing to retire in their late 50s or their 60s. But we're there to help with that whole journey and in a holistic way. And that's the way I encourage people to think about their engagement with us. The other bit that I really encourage people to think about is we really do have great engagement politically across the political organisations and parties across the UK. And we're not just a here today, gone tomorrow organisation. There's a big commitment from government to improving financial well-being. We've got some really big strategic plans, which I'll talk to you one-on-one. I'd take you through, but through to 2030 about how we're going to do that across lots of different sectors. And what I would really just kind of concentrate on in that point is that an understanding that we're here for the medium to long term. We're not just here for 6 months or 12 months or 18 months. We're here to build relationships with partners and work with them closely and do the things that help support them and help support the sectors that they're in. And I know there's people on the call today who we've had some really good relationships with over the last few years. Paul, can we just jump on one more, please? So, financial well-being. I know it was really good. Paul said they were going to do the surveys earlier on and have a look at the surveys. So one of the things I try and do before we go a bit further today is just kind of set the state of play, set what we see as an arm's length government department and how financial well-being, as Paul and Rebecca and the ambassadors were saying, really does impact lots of people across the UK. So from our statistics, from our government statistics, we know there's about 52 million adults in the country in the total of the UK. And of those 52 million adults, there's about 9 million adults that are either missing payments or feeling like keeping up with their bills is a really heavy burden. In other words, it's a major financial pressure. Day in, day out, week in, week out. This is something that keeps people awake at night. They're looking at the ceiling, worrying about their money because not everything is balancing. They're in deficit and they've got significant financial pressure and stress in their lives. So that's the first group. And you can see in terms of that group, that kind of adds up not far from the figures that Paul and yourselves were talking about that the CIPD has in terms of those people who've got in-work poverty. It kind of matches in many ways to that figure. The next figure is something slightly different. So that's the 11.5 million people that have less than £100 in savings are people that we really look upon and we see that they've got what we would call a fallback position or a rainy day fund. What we mean by that, and this very often is people who are in work, is that employees driving to work in their car, on a Tuesday morning, unfortunately, as they're driving to work, they hit a pothole and blow 2 tyres on the car. The 2 new tyres are £200. Now, the reality of that is they just don't have £200 in savings. They don't have £200 in spare money. So what that means is immediately that cost, that pressure has to be paid from either a credit card or it has to be paid from an overdraft or some sort of borrowing, perhaps through a credit union or perhaps some sort of buy now, pay later scheme like Klarna. But what that means again is it adds to people's financial pressure and stress because they just don't have any fallback position. So one of the things that we encourage people and organisations and employers to do is we work very closely with a lot of credit unions who are really great at engaging with employers and having good relationships with employers and building up savings funds for consumers, for employees. So tomorrow morning, for example, I'm doing a presentation with Manchester Credit Union, which many of you may have come across, one of the biggest credit unions in the country. They have nearly 35,000 members, really, really well organised. They've got a fantastic CEO, Christine Moore, who's been there about 20 years. And those kind of organisations are kind of organisations that we also work with because they have the same ethos as MAPS. And what we mean by the same ethos is they're there to help people. They're there to help people make the right decisions and do the best for them in terms of their financial situation. So it's something to think about today. And again, if we come out and engage with you directly and start building on financial well-being in your organisation and the strategy behind that, that's something we tend to have a very close look at in terms of opportunities. And then the final figure is the 24 million people. So you can see that's nearly half, it's 46% actually of that 52 million people do not feel confident about making decisions on financial products and services. And crucially, that includes pensions, which beyond, for most people, beyond buying a house, their pension is actually the biggest decision financially they'll ever make in their lives. So again, when I said to you 5 or 10 minutes ago about we try and demystify that information and provide it in a very straightforward way, I'm going to show you our website in a moment. But what we do in terms of the pension side is we try very hard to engage. We have some particular colleagues who work within MAPS, who work for 2 departments within MAPS. One is called Pension Wise, and those colleagues are there just to help people who are aged 50 and over prepare to retire. They're in what we call the last stage of their retirement journey, and that they're getting ready, start thinking about annuities, about drawing down their pension. And then we have a more generalistic pension service, which we call the Pensions Advisory Service, TPAS, who handles queries right throughout people's pension journey, from when they first start in their teens or their 20s, their 30s, their 40s, their 50s, their 60s, even when they're retired. So we have two particular pensions departments that help support those groups of people. And I kind of understand why 24 million people don't feel confident about making decisions on financial products. I think on the pension side, we lobby the pension side quite hard. We work with big organisations like Aviva. I used to work for Lloyds, who own Scottish Widows, and we try and get them to speak to other people in a more straightforward way. I've worked in financial services for 30 years. I'm 51. Even I find reading my pension statement from Aviva not the easiest thing in the world to do. I've got 30 years of experience of working in financial services and for banks and building societies and money and pension service. So if I find it quite tricky, I think most parts of the population are going to find it quite tricky. So again, we try and encourage people and organisations to talk in a very straightforward way, to engage in a very straightforward way. And we build content and tools and information that we're going to have a look at in a moment that helps improve that journey. Paul, can we just move on one more, please? So I said today, and some of the people on the call today have already engaged with our Money Helper website, but what I do today is I try and just give some examples. I won't take you through every page of the Money Helper website because there's a couple of hundred pages and we'd be here till about 9 o'clock this evening, and you probably would want to all go and have your tea by that time. So what I do like to do is just give you some examples and some key points just of what the Money Helper website first of all looks like, what's in it, and how it's probably a bit different to most other websites. So first thing I will say is this is one of the highest traffic money websites in the UK, and it's designed and built to cope with that traffic. Obviously during the pandemic, we've had huge amounts of demand, as have many money-based organisations. And this website has always been able to cope with that and consistently been able to cope with that. The other thing, before we start looking at the sections within the website and some of the tools that Paul and Rebecca and the ambassadors were keen to see today, is a couple of points I'd just make to you. When we relaunched the website on the 30th of June, 1st of July last year, kind of 9 months ago, one of the things that we did is we just tried to change the look and make it a little bit more straightforward. So you can see on the bottom right-hand side there's the HM government logo. And one of the reasons we put that in is that the market research said to us that when consumers were looking at our website, when employers or employees were looking at our website, that built trust, it built confidence. It made people understand that we're not trying to sell them a product, nor are we trying to take people's data and sell it on to another organisation or undertake a soft credit search. You will find that when people use a lot of comparison sites, actually the comparison site is very, very keen to harvest people's data because that data is valuable. That's not what we're here for. We're a government department. We don't do that. Nor do we ship the data off halfway around the world and store it in another country. Everything that's done here is used on, Mac's government servers, so you can have confidence and trust about not only the service we're providing, but the security of that service. The other thing that we did when we kind of did the refresh last summer is you can see it on the right hand side, that just above the HM government button, HM government logo, there's a little shaking hands and it says talk to us live. Now the reason we put that in is because times have changed. As I say, I've worked in this world for about 30 years, and throughout most of my career, probably for the first kind of 20 years of my career, the primary form by which people engaged on financial queries and money queries and health pension queries was either face-to-face or over the telephone. A lot of it was over the telephone. Now that's changed. Younger people in their teens, people in their 20s, people in their 30s have become much more digitally focused and much more keen to use digital engagement to speak to organisations and contact organisations. So we have a WhatsApp function. You can talk to us live. And again, key point, you're not talking to a different team of people. So we know that a lot of people in their teens and their 20s and their 30s, and some older people as well, want to talk to us digitally. They might want to do that on the bus home on the way from work. They might want to do it as they're having their sandwiches at lunchtime. And that's great. We're happy for people to do that and we're happy for people to engage with us on that basis. But it's really important that the people who are doing that are getting the same level of engagement, the same level of service, the same level of quality of people that we hire. So that's one of the things that we do there. Right at the end of the pack today, there's our free phone telephone number. Lots and lots of people still ring us into our contact centres. We have 2 big contact centres and speak to our colleagues. But it's important to realise that whichever route people choose to use, they're going to get the same quality of service and they're going to deal with the same people who have the same level of knowledge. The other bit about the people that you speak to and engage with in terms of on those teams, we like to hire people who have what we call life experience. So, we're not anti-hiring people who are in their early 20s, but it's quite difficult for someone who's 22 to talk to people about pensions. It's not something they've experienced enough probably in their lives. So we like to hire people who have lots of technical knowledge, lots of experience, and have faced some of these challenges themselves. So they've got empathy with that situation and they have an understanding of that situation, the practical realities of dealing with money issues and making what at times can be some of the biggest decisions financially people will make in their lives, when they make decisions like when to retire, when they make decisions about what they're going to save and how they're going to save, when they make decisions about perhaps if they're buying a house and how they're going to save for a house and the kind of product that they're going to use from a bank or a building society or a lender to support that decision. So again, what you'll find when you speak with the people that we hire and that do that engagement for us, you'll find that they're very empathetic. They speak in a very straightforward language. They don't go into financial services jargon. And they're also very happy to have those conversations. We're not time limiting them. I know when you work for many of the banks and building societies, when I work for Lloyds, there literally would be a clock on the wall saying how long the average call was taking from the moment the office opened to the moment it closed. We do it in a slightly different way to a bank or a building society or a lender. It is much more about getting the right information to the individuals and giving the right level of support. And also if people want to speak to us more than once, that's fine. Sometimes people will come back to us 2, 3, 4 times on the same query. That's not a problem. We're a government department. We're here to help and we're very happy to help. That's part of what we're here to do. So if people are unsure or feel they need to go away and think about things or go away and have a look at their budgets and add things up and then come back and speak to us again, that's part of the process. That's what we want people to do. Now, I said I'd just talk also a little bit more about the website itself, and you can see that the link at the bottom there is in the light blue. The Money Helper link is there. So for those of you who have not been on that website, probably a really helpful thing if you can over the next few days, jump on and have 15 or 20 minutes just kind of familiarising yourself with the website. But what we do beyond that kind of approach in terms of the engagement with the website is we build the content in 2 ways, in 2 basic ways. And the 2 basic ways, the first way is really shown on this page, and that's about the sections that are in the website. So we break down, you can see in the royal blue colour about 1/3 down the page, it says benefits, everyday money, family and care, homes, money troubles. That would include things like debt, arrears, people who are starting to struggle, pensions and retirement. We have a really big section on pensions and retirement, savings and work. Now we build that content on the website in 2 different ways. There's 2 basically different types of engagement. Paul, can we just jump on to the next slide and I can show people what that is? So you'll see that here I've supplied to you the everyday money section. So this is if you click through in the magenta colour onto the everyday money section. And there's 2 types of content there really. In the left-hand column and the middle column is all the sections, all the different things that we'll provide information and assistance about. So that for everyday money will be things like banking, how to choose and manage a bank account, budgeting, which we're going to look at in a bit more detail in a moment, buying and running a car. Why is buying and running a car in there? It's in there because it's a key cost for people. For many people, and particularly working age people, a car is not a luxury. It's something they need to commute to work. For many families, it's not a luxury because it's something they need to get children to school or perhaps to support elderly relatives. So we include costs that we know are going to be really big in terms of people's budgets and household budgets. There's things like credit and purchases, there's insurance, because again, that's a key cost for lots and lots of family. There's types of credit, things like store cards, credit cards, all that kind of breakdown of information. And then a kind of overview of the money guidance section. So that's all basically the content, the information, the updates, the things that we would like them to be able to look at and engage with, whether that's written content, it might be quite visual as what we're looking at today, it might be a YouTube video, but it's all basically information. On the right hand side in the 3rd column is what we call tools. And tools are different. Tools basically are interactive information. So what that means is the information is taken from an individual and then an output is tailored to that individual. So you can see there on the everyday money section, we've got a tool that compares bank accounts. We've got a cool tool that works on the credit card calculators to calculate credit card costs and the cost of credit. and we have a budget planner, which is one of the most popular tools that we use. Now, one of the things I say about the tools, we design the information here at the Money and Pension Service, all the information we provide across all the parts of the organisation, supporting financial well-being, supporting financial education, supporting money, supporting pensions, is designed to be as shareable as possible. We're not trying to hold on to that information. We've got 370 colleagues, and we know we can't answer every question about money and pensions in the UK for those 370 colleagues. We need to partner and work alongside organisations, along HR side employers, alongside HR teams to deliver that message effectively and provide the best support that we can to people. So one of the things that when we were looking previously, Paul and I and some of the others, we said today, is we just expand on one of those tools. But the bit I would say about the tools is they are shareable. There's two ways that they're shareable. You can either link through to them as an organisation, and that's great and very straightforward, and we don't really restrict you in terms of the ability to do that. That's a very straightforward way of doing it. Or you can take the content in a syndicated fashion. And what we mean by syndicated is we create an embed code, and this content can then be dropped onto your website. Now, there's definitely a number of organisations that are on the call today that have done that. Again, we're not precious. It's about what works for you and your organisation. But one of the reasons today I'm going to look at the budget planner is that is one of our most popular tools across all sectors, across all types of employers and organisations and partners, to be used on both ways, whether it's a straightforward link or whether it's a syndicated content element. If you did choose to syndicate something, you'd need to get in touch with me, and I'd work on that relationship and making sure that the code came across to you. And the only other bit I'd say before we look at the budget planner, if you did embed content or do what we call a syndication process, is we have a license agreement for that. There's no cost. We're not charging you for that information. But what we do is we basically set some rules about what we're going to do, which is make sure that the information is accurate and it's updated in a timely fashion and it's presented in a straightforward way. From your side, as your organisation, as an employer and on HR side, we ask that you take the information as is provided. You don't try and change the code. You don't try and change the tool. It's very rare that people do that, and they usually do it with the best intentions, but we can't let you do that because we have to have confidence and know that when we give information to an organisation, be it, for example, Co-op or Jaguar Land Rover or Manchester Council or whoever it may be, that they're all getting the same information. So we can't have people changing our information in the background. So when a tool is provided to an organisation, you can have confidence that everybody gets the same information, no matter how large, how small, what size of organisation you may be. Everybody gets the same info. Paul, can we just move on one more, and I'll expand on the budget planner and just show people a little bit more about that. So just before I get to the budget planner, there's a couple of other tools that I just thought I'd mention today. The budget planner is one of the key tools that we use with people. It's what we consider a foundation tool. It's a building block of people's financial well-being to ensure that they have the right engagement and the right level of knowledge about tools. Now, I'm not going to take you through every tool today because there's a couple of dozen tools that we can provide and supply to organisations. But you can see that there's some others there. We built the Money Navigator tool, which is a relatively new tool that was built about 18 months ago in response to COVID. And that's a tool that's really good at looking for financial stress in people's financial difficulty in people's households and making suggestions, practical suggestions about how they can improve that situation financially, and perhaps organisations that can support them, be that ourselves, be that the kind of charities that I mentioned earlier, people like Step Change Debt Charity or Shelter, or be that by claiming extra benefits, perhaps through someone like DWP. So I won't take you through all the tools and calculators. I'm going to show you a selection of them today, but the one I said I'd start off with when I spoke to Paul and Rebecca is the budget planner. So Paul, can we just jump onto the budget planner, please? So budget planner. First thing I always say about budget planners is if we were all sat in a room together today and I asked everybody to put their hands up and say how many people have a budget planner, usually about 90% of the room put their hands up. And if I go into a big organisation, I go into Co-op or Jaguar Land Rover and we have to ask that question, that's the kind of response that we'll get 9 times out of 10. The reality is that's not how many people use a budget planner. About 50% of people use a budget planner. It varies from sector to sector and industry to industry. But only about 50% of people use it. So one of the reasons we encourage people to use the budget planner as I said to you a few moments ago, is it's a financial foundation. It's a building block of what people can do with their financial well-being. Because if you don't know where all your money is coming in from, and crucially, you don't know where all your money is going out, it's really difficult. You're going to probably get into some difficulties in terms of payments, in terms of missed payments, in terms of your credit file. So what we say to people is this is a really good building block. And it's one of the tools that is, as I said to you earlier on, one of the most popular tools on our website. And it's one of the most popular tools that I work with in terms of organisations. The other thing about the budget planner is it's probably one of the longest tools that we have in terms of people filling in the information. And we're going to look at that in a moment. I've got a visual example of that. The reason for that is really simple. We have to be fairly consistent with people, fairly precise in terms of what they're doing. We try and make our tools work as slick and as straightforwardly and not be overly lengthy. When I worked for Lloyds, I was very proud to work for Lloyds for a long time. Great bank, great organisation. But we used to have a budget planner when I worked in the mortgages part of Lloyds, and it was just too long. We would see people get halfway through it, they got fed up of filling the form in, and they'd stop and log off. So one of the things that we try and do with all our tools is make them as really straightforward, as simple and as slick as they possibly can be, so that they don't take too long. So we were mentioning the Money Navigator tool a few minutes ago. If you fill that tool in, we know from experience that on average, that tends to take people around about the 15-minute mark. It might be 14 minutes, it might be 16 minutes, but it's there or thereabouts. And we know, therefore, that people will complete the tool and take the outcome that's tailored to them. The budget planner takes a little bit longer just simply because it asks for a little bit more information, but it is a worthwhile building block, and it's one of the things that we really encourage people to do. It really helps set up their financial well-being, and particularly for those people that are struggling, it perhaps gives them a lot more clarity. So I'm just going to show you what that looks like in a moment and what are some of the things that we do with it that's a bit different. So Paul, can we just move on one more, please? So I won't take you through every line of it because it does tend to take about 20 to 30 minutes to fill in. But there's basically 3 elements to the tool. There's a building block 1 on the left-hand side, which is where we ask people to enter what they spend and how much they earn. And you could go, okay, James, lots of budget plans do that, lots of tools do that. And actually, I think most of my staff understand that. But the reality is that's not true. First of all, people tend to be pretty good at knowing what their incomes are. They know what the incoming elements are. They know what they're getting paid. They know probably if they're receiving benefits, what those benefits are. They know if they've got savings or an inheritance, what that money is. People tend to know what the big things are. They're not bad at knowing what the outgoings are. They'll tend to know what their rent payment is. They'll tend to know what their mortgage payment is. They'll tend to know the key costs, what their council tax is, what the lease is, what the PCP plan is on their car. But what people are not so good at is ensuring that they include all the costs that come with life. So we tend to find, and this is not just my work at MAPS, when I used to work at Lloyds, we would find that people forget, not on purpose, they just forget through being busy in life, some of the other costs that do build up. So they'll forget that they've got a mobile phone contract with EE for that iPhone, and actually it's £39 a month. And over a year, that's the best part, £500. They'll forget that they have a gym contract with a local gym down the road, and actually that's £28 a month, and over a year that's over £300. And those two costs alone, you can see you're heading towards nearly £1,000 a year if you add up those two costs. So the budget planner is really good at asking for all those kind of extra costs that sometimes people forget and don't build into their budgets, but do add up and make a difference every month, and crucially over the quarter and every year. The other bit that the budget planner will do is, I said to you earlier on, we're quite a visual organisation. So when I worked at Lloyds, our planner, unfortunately, I always felt you needed to be an accountant to work it. It was just too dry. It was too much written numerical information. We try and break that information down in a much more straightforward way. And that's not just what we do with the budget planner. We're really big on getting people to have information that they can see and is visual and comes to life a lot more straightforwardly. So you can see there's the calculator that gives people a breakdown of their finances. And that's really so that people can see that and feel and touch it in a much more straightforward way. And then stage 3 is the bit that probably we do differently to, certainly in my experience, a lot of banks or business societies or credit card companies. We then, it's fine looking at a budget, and if the budget is in hand, in other words, there's not a deficit, then things are probably reasonably positive. But what we do very proactively is we will then look and see how people can save money, and crucially how they can cut their costs. So we're not the Grinch. Our job is not to cancel the nice things in life. So we're not saying to people, don't have that EE smartphone, that Apple smartphone from EE on your contract. But what we're probably trying to say to them and suggest to them is that the best deal you can get? Could you go to Vodafone and get that deal a bit cheaper? Could you go to Tesco Mobile and get that deal for £32 a month rather than £39? And start to make people think about really proactively choices and decisions that they can make, positive decisions that they can make that will improve their financial well-being. Now, if they're in deficit, obviously we're trying to get them into a non-deficit position. Even if they're not in deficit, that will help improve their position. It will give them more funding, that will give them a bigger safety buffer that they can either save, or they can put in their pension, or they can put into retirement, or whatever the case may be. So I think if you look at that budget planner, and it's something I really encourage people to do, one of the things you'll find about it that is different is that kind of proactive nature of trying to make people think about their costs, their income, and really how they can make the most effective usage of their money. And as I said to you earlier on, that's one of the biggest tools we have in terms of demand and popularity. Paul, can we just move on one more, please? So, one of the things I said I'd talk about today, and actually is very, very new, and when I say very, very new, I mean as of yesterday, and we've been working on behind the scenes, and I know I've talked to a number of the bigger organisations about, and been speaking to Paul about, and Rebecca over the last couple of weeks, and the ambassador over the last couple of weeks, is this huge pressure that's coming on people in terms of rising costs. So, we understand, we're not naive at the Money and Pension Service. We don't live in a blue sky perfect world. We understand that there's some really significant prices. I know Rishi in the budget yesterday took 5p off fuel duty, but even after the government's taken 5p off fuel duty, I think we all know at Christmas we were probably paying about £1.30 a litre, and most of us are still going to be paying probably something like £1.60 a litre, give or take, one way or another. That's a really big rise for people. It's a very significant rise. And if people have to commute, or if they have to support family members or take children to school, it's not something they can easily cut. They have to think about those priorities of their bills and the costs and the charges that are coming into their life in a very, very straightforward and very cold fashion, really. They need to think about things a lot more closely at the moment. And that impacts, as Paul was saying earlier on, tens and tens of millions of the population here in the UK. So the other point about what's happening at the moment is it doesn't seem to be a temporary blip. We can look at things like the price cap in terms of energy costs. Those price caps are rising. I know my price cap is about to come off, and I look at what my price of my future energy bills are going to be, and it is quite shocking in terms of that. So those costs, fuel costs, a lot of the grain that Europe eats is sown and collected off the in Ukraine. Food costs are rising. Those costs don't look like they're going to change within 4 weeks, 6 weeks, 8 weeks. These costs look like they're going to be with us for some time, probably the rest of this year, possibly longer. So what we've done in terms of that is we've developed some new content to help people with these concerns, to help employers, to help engage with those topics. Now, we understand that that's not an easy conversation. And we also understand we can't wave a magic wand. We can't suddenly make fuel prices be lower. So what we're really saying to people is we've created some new content. We've created a new tool, which I'm just going to show you, which has literally gone live within the last 24 hours. And we've named this campaign is about finding your way forward. And that's really what we're trying to engage with people on, and with consumers and employers and employees on. What we're trying to make people think is about making the right choices and the best choices they can in what is quite a difficult situation. I'm not going to pretend, I've done this job for a long time, and I'm not going to pretend that I've not really faced a situation like this ever since I first started work in the early 90s. So it is a big challenge for people, and it's what we want to do is, again, help them make those right choices. So you can see on the left there's a section now that we've created and literally went live yesterday, which is all about help for people starting to struggle with their bills and payments. And what we've done in terms of that, and I'm not going to take you through every page of that, because again, we'd be here quite a long time. But if organisations want to speak to me one-on-one, we can have a more detailed session just about that alone. Is we've created particular elements within that section of the website, and a new tool, which I am going to show you in a moment, that helps people think very hard about those choices, and also where they can get the best deals that they possibly can achieve. So how can they achieve the best energy deal? What's the ways that they can do that, and suggestions and hints and tips that we can make as the Money and Pension Service to make that occur. Or can we move one forwards and we'll have a little look at the bill prioritizer. So I said to you there was a new tool today, or as of yesterday, which is all about helping people prioritise their bills. Now, from experience, I appreciate most of the people on this call are HR stroke people professionals. Your background is probably a little bit different to mine. My background is I've spent a lot of time helping people with this, not just recently, but going back in my maths career over the last 3 years and going back into my banking and financial services career prior to that. And one of the things that we know, and I know from hard experience, is that people, when pressure comes on financial, when people start to struggle a little bit and the financial climate and the economic climate is tough, people don't always make the right decisions. They do need some help to do that. They do need some assistance. They do need an organisation that they can trust to help them do that. So one of the things that we've done is we've created a tool that helps people prioritise their bills. And you can see there, it breaks down lots and lots of different bills. It'll break down things like their energy bills, their credit cards, rent, mortgage, council tax, car finance, the whole remit. I won't go through every one of those kind of 25 categories, but it will help them think about those bills and start to prioritise that information. Now, the first thing I would just say to you about this new tool is that is a tool, it's been built really quickly, and our IT and our content team and policy team in London have worked their hearts out in terms of doing that. It's not a tool that we can syndicate as yet, but you can link to it, but it's been built really, really quickly over the last kind of couple of months, and usually a tool takes us about 6 months to build, so you can see how hard those colleagues of mine in London have worked to get that delivered. The link is to that tool is there in terms of you can jump on the Money Troubles Way Forward section and it will take you through to that prioritising bill tool. One of the things I'd add to that conversation is, from experience, as I said to you, you would think that people pay the bills that are most important first, and that's just not true. What they tend to do, particularly if they start struggling in financial difficulty, is they pay the bill of whichever creditor is shouting the loudest. And what we mean by shouting the loudest is texting them the most, is sending them the most letters, is ringing them up the most. And that tool will help people think about that situation very, very appropriately and see what they can do practically to reduce the bills, and also probably start to build some confidence in terms of the engagement that they might need to have with some of those parties. So to give you an example, when I worked at Lloyd's, we had 2,000 people, and Lloyd's still has 2,000 people, whose job every day is to help people starting to get into difficulty, starting to struggle, starting to get behind perhaps with their overdraft or their credit card or their mortgage or whatever the case may be, their car loan. Lenders, by law, the regulator, the government obliges all lenders, not just Lloyd's, NatWest, RBS, Barclays, credit card companies like American Express, building societies, to assist customers when they start to struggle. Now, they might assist them in a variety of different ways. That way might be by extending the term of the loan, giving them some breathing space, reducing the payments for a period of time for 6 months or 12 months, reducing the interest on the loan, seeing how they can assist them in terms of making that position better. That's a requirement on every lender in this country. A lot of consumers, a lot of staff, a lot of employees, even some employers don't understand that that situation occurs and that those organisations have an obligation to assist as far as they are able. So one of the things that this tool will help them do is focus on what are the most important tools. And I'll give you an example of that. When I used to work for Lloyd's and Halifax have the biggest portfolio of mortgages in this country by a long, long way. In some towns, they'll have nearly 50% of the mortgage book. It's very important that people pay their rent payment or they pay their mortgage. In other words, it's really important that they pay the bill that's going to keep the roof over their heads. But it's amazing when you sit down and you sit in a contact centre for a big bank or a building society, how often people don't do that, but they'll prioritise paying the bill for their car lease. Now, the reality is you can't sleep in your car, you can't eat in your car, and you can't have a shower on it and get ready for work in your car. So it's more important that you prioritise the key bills first. And that tool will help people function in terms of that process and think about that process. I appreciate it's a really big challenge at the moment. It will also look, I know there's a big section within here about people being squeezed and about how they can make the most of the money that they have and how they can most effectively hunt for the best gas bill, for the best electricity bill, for the best insurance deal, whatever the case may be. So that content is new. We're just building some B2B content for our organisations and partners that we work with at the moment. And I'll be very happy to speak to lots of you over the coming weeks about how we can assist with that part. Paul, can we just jump on one more? There's a little bit more in terms of that section. So the other bit I wanted to just talk about there is this concept of what we call squeezed incomes. So lots and lots of families, lots of households, lots of employees are finding their incomes are just getting squeezed on more and more different ways. So there's not just the bill prioritizer tool. Within that new content, within that new information that's on there, there's lots of ways I was just mentioning to you about things about saving money on household bills, help to pay for essential things, the kind of support that I was just talking about that banks and other societies and creditors can provide, but also things like the council tax rebate that's occurring at the moment. Help whilst you're working. Paul and Rebecca, right at the start, and when the ambassadors did the session, it's very important that employers realise that this is a growing challenge for people and it's not going away. This is something that's going to develop week on week, month on month. If suddenly there was an agreement in terms of the Russian and Ukraine war, that might improve fuel prices, but it's not going to change overnight. These things don't look like they're going to occur really quickly. And also, we haven't gone, I know Paul spoke a little bit at the start about mental health, and I have colleagues who work very closely on the mental health side. I know some of the people on the call today come from the NHS, and I work with some of the NHS divisions across the Northwest. But money pressures put a lot of people pressure and challenge on people's mental health. So there's a whole section there about money and mental health and how that can help and the assistance that we can provide. And also the assistance that other organisations like mine can provide, that Paul said right at the start. The bit I would say today, and I promised Paul, I know I've run a little bit already, but I promised Paul that I'd try and get as much information as I could today in terms of that. It is really, really new. We spent a lot of time and effort. I've seen some of that content being built over the last 3 or 4 weeks, getting it right, making sure that the content is up to date and ready to go. And obviously, as with all our content, as things change, we update the content as fast as we possibly can. So one of the things I'd say about that new content today, from the squeeze side, from the bill prioritizer tool, from this concept, this campaign of finding your way forward, is a big challenge for people. We're going to also do some social media, and we're going to do some things on Twitter and LinkedIn and get that information out there and really start pushing that over the coming weeks and as we move into April. But it's something that we'd like organisations to engage with. It's not a one-way street. It's not just about what we provide. We understand that it's about what you as employers can provide. It's about what employees can do practically. But it's a massive challenge for society at the moment in the UK and across, you could argue, across the world really. And it's a big thing for people to engage and start to buy into. So again, as I said to you earlier on, if you haven't seen, that content is really, really new. If you haven't had a chance to see that content over yesterday or today, over the last 24 hours, definitely worth jumping on our website, seeing what's there. And if you want me to come and speak to your organisation one-on-one and have a little bit more detail about that, and I know some of you on the call today have already lined up to do that with, then I'd be very happy to do that and start seeing how we can support that information in terms of it being issued out, in terms of your colleagues and employees engaging with it, in terms of just basic support, in terms of things like social media content, be that LinkedIn, be that Twitter. I know one of the things that's nearly ready to roll is we're building some new YouTube videos which are all around these concepts of squeezed incomes, all around things like the bill prioritizer and this pressure on people to find their way forward. And again, that information should be available very, very soon. Paul, can we just jump on one more? And I'm just going to take a drink because I'm losing my voice. So I think what I said today is I'll try and give an overview because we could really speak for hours. But one of the things I said I would do today is also just give an example of another campaign that we run that tends to be really successful, that I know some of the other people on this call today have engaged with and their organisations have engaged with really, really successfully. So the Find Your Way Forward campaign and all the updates and information and content and tools and assets that we're going to provide on that is pretty much going live literally as we speak over the last 24, 48 hours and going forwards. One other campaign I just wanted to really call out to people that we've had a lot of engagement with across the Northwest, which runs every autumn, is our Talk Moneyweek campaign. I mentioned to you earlier on this concept of getting people to talk money, of getting employees, of getting employers, of getting organisations to engage, not just with us, but with the concept and the challenge that people have around money and money conversations. That's one of the biggest campaigns we run every year. Usually it's pretty much the biggest campaign we run on an annual basis. I know Lucy Doherty is on the call here from Auto Trader. her colleagues supported that very strongly and had a really great week with it in November in the run up to Christmas last year. Co-op group, I mentioned earlier on, they supported that that campaign massively in the run up to autumn last year and beyond across the 8th and 12th of November. So that's when the campaign will run this particular year. It's not a technical campaign. That's a campaign about building empowerment, about building confidence, about getting organisations to engage with us, about getting people to engage with us, and also about getting people to see other individuals, high-profile supporters who work with us and really help support that kind of concept. So you can see there's a picture there of Martin Lewis from Money Saving Expert, who's consistently supported our Talk Moneyweek campaign on a national basis, done lots of media for us, TV, radio, and things of that nature. What we do with that campaign is we build a participation pack, which is available late summer into early autumn, so that organisations can engage with the campaign however they choose, be that for the employees, be that on social media, be that through running webinars or quizzes or whatever the case may be. So I just said to Paul today, I won't go too much on about that campaign because it's a campaign that really will start to pick up pace in the back end of the summer. We're just going into the spring now. But it's an example of what we do as an organisation. It's an example of what we do really, really well. And it's an example of what lots of Northwest organisations have supported us with very, very strongly. And if you haven't done so, we'd be very happy for you to do that. If you have, thanks a lot for your support over the last couple of years with it. And we'll be making sure that campaign is bigger and better this year. And I can see in the chat, I'll just go finally through to the summary before we open up for questions, because I said we'd get just past 7 and then we'd open up for questions. So Paul, just the last slide, please.
Yeah, just before we do, James,
okay.
and obviously gives you an opportunity to have another drink and just reflect on and give people a chance to reflect on the content so far. But I think just in addition to that Talk Moneyweek, we've agreed that we're going to hand over another wellbeing event on Thursday, the 11th of November, and we're going to invite someone from Maps. It may well be James, most likely to
probably will,
to come back and just touch base on some of these issues that we spoke about this evening, but also to get us talking about money and to put it at the forefront of our thinking when we're talking about well-being, talking about it in a holistic way. We can't avoid this. This is part and parcel of it. So as a result of that, in support of that week, the 11th of November, if you have your diaries in front of you and you want to pencil something in, but well before that time, we'll be in partnership with James advertising that particular event. And the CIPD here in Manchester are going to get 4 square behind that week and hopefully put on another session for everyone to attend and find out a little bit more about the journey we've all been on. So yeah, great opportunity, and thanks again for reminding me about that, James.
No problem. And one of the things we do with that one, Paul, one of the reasons we do that campaign, everybody deliberately at that time, is that's about 6 to 7 weeks before Christmas. And obviously there's lots of financial challenges for employees, for employers, for consumers this year. But usually, most years, Christmas is a big financial pinch point for lots of people. And as Paul was saying right at the start, particularly for those people who are financially squeezed, because people feel a pressure to buy presents for children, for family, to entertain, to go out. There's additional costs. To be clear, I think I said to you earlier on, we're not the Grinch. We're not there trying to cancel Christmas. What we're trying to do is get a campaign in that really gets people thinking about their money in advance of what is one of the biggest financial pressure points of the year. Because what we don't want people to do is end up overspending and ending up with what it's commonly referred to as the January blues, when people spend perhaps too much over Christmas and New Year, and then they get some really big credit card and some really big bills coming into the new calendar year in January/February. So, as I said to you earlier on, it's just a campaign I like to make mention of to people because we've had great support, and I can see in the chat there from a lot of people who have engaged with it or have engaged with it in November last year. And it's one of the big campaigns that we run, and we really like people to try and support that and give them some advance notice about it. A bit different, Paul, to what we're doing at the moment around the kind of Finding Your Way Forward campaign, which is a much more rapid response campaign to things that have happened over the last kind of 2 to 3 months. Okay. Yeah, and then just before we open up for questions, everyone, I just always give a summary. I know I can see a few people had said, could they have my details? So just a quick summary before I come just to the contact details, both for Maps and for me. So there's completely free. The bit I really do try and get across to everybody is, as an organisation, it is completely free and impartial, the support and the guidance that we provide. I was working with a housing association the other week. I won't name who they were, but they were actually paying somebody about £2,000 a month to provide them with all the kind of information that we provide for free. So that conversation would then save them about £25,000 a year. So it's really important that you understand that we're very happy to help and provide that level of support. There's diagnostic tools, that kind of interactive, tailored information and calculators to help people keep on track and plan ahead. And support's available over the phone and online. We have a really big digital presence. I know everyone's super busy at the moment, and it's going to run up to the end of the financial year and to Easter. But even if you're really busy, if you get a chance, if you're having a sandwiches one lunchtime, please do jump on our website and learn a bit more about us. The website detail is there. That's the entry point for Money Helper. The WhatsApp number is there, which again is free. The telephone helpline you can see is a free phone number to our contact centres. It's no 800 numbers. The contact details for me, for those of you that I've not worked with before or engaged with before, my email address is there, and my mobile telephone number is there. If you were outside my area of coverage, please still come to me. I have great relationships with my colleagues in the Midlands, to the south side of my area in Wales. I go up to the Scottish border as well, and I have great relationships with my colleagues across the Pennines, in terms of Jenny Wright and Carleen Dowden, who work on that side of the Pennines. So, I'd be very, very happy if you're not in my area. I know it was mentioned earlier on the call that someone from Yorkshire joined the call. I'd be very happy to pass you across to the relevant person. But if you come to me, I'll make sure you get the relevant person rather than you hunting for them within Mac's organisation. And that, I suppose, Paul, is a good summary of how we engage, and obviously key topics at the moment. I can see there's quite a lot of questions firing in that people have raised. So shall we open up the Q&A bit and try and answer some of those and go from there?
Yeah, I think, first of all, thank you again, James. We have another survey, just really as an opportunity for people to have thought about the content this evening, which has been absolutely fabulously well presented, James. Again, the detail that you've managed to deliver in what essentially is a short space of time. From my perspective, it's gone really quick because there's such a lot of great information in there. What I wanted to do before we go on to the survey is, number one, just give people an opportunity, if you've not thought about this already, rather than wait for the slide decks to be circulated and uploaded online, if you want to take a picture of that particular page with all the contact details on, it gives you the opportunity to take that away and use it at your leisure, rather than waiting for us to send you that detail. Hopefully you've all managed to gather that anyway. And then again, my thanks on behalf of CIPD Manchester branch to you for presenting this evening, which some really useful information and very timely information for the people in Greater Manchester and beyond. And throw you over to my ambassadors who've been keeping an eye on the chat function, and we'll open up the questions, and then we're going to have another Mentimeter poll just to see how people have felt as a result of tonight's session. So yeah, any ambassadors who'd like to share some questions off the chat, please feel free to do so.
Yeah, that's fine. I would like to share one that has been asked to you, James. They've asked, how does your organization differ from the civil service charity, because they also offer financial advice?
Sure, and yeah, that's a common question that we get. And I suppose the difference between us, and not just a civil service charity and other organisations, is we're not a charity, we're a government department, and we have that real focus on that free and independent support that we provide. So what you will find, for example, with something like the civil service charities, they will focus on a particular sector or particular organisation or particular group of consumers or employees, and provide support tailored to that individual organisation. So that's great, and that's fantastic for the support that they provide, but it's probably not as holistic as Paul was saying earlier on. We tend to work in this kind of wider space, and we're trying to provide information that really works across sectors. So, I was saying to you earlier on, we work with lots of different sectors, whether that's councils, whether that's housing associations, whether that's manufacturing firms. We're trying to provide information that works in the round. And compared to most charities, and I'll give you an example, another charity that I work with is very sector specific. I look after the Railway Benefit Fund, which supports all the kind of railway workers in terms of all their financial queries and challenges. And they have a great, fantastic engagement with those particular individuals and a good understanding of how railway workers need support. But when they need that more technical advice and that wider advice, they come to us, just simply because we've just got more resource than them. So that you'll find that relationship often works that way.
Okay, I think that most of the questions were just to share your details, but I have a comment from Katie saying that this has been a very great and informative session, and that now she has some ideas on how she can support her employees. She's saying that unfortunately her organization has decided that they can't offer a pay rise this year, which would generally happen in April to rely on national minimum wage. So there is a lot of happening. So I think loads of people are taking a lot from your advice, James. But for everyone, if you want to share more questions in the chat, feel free to do so, and James will answer those.
And just to go to that point, Julia, I think that the bit I would say in terms of that, I feel that challenge personally. I work for the government, and when Rishi made his announcement yesterday, he basically said, he didn't quite say it as bluntly as this to not upset all our civil service colleagues, but he basically said that people in the public sector would get a very small rise, if any. Some elements of the public sector may not get a rise, yet the costs are still going up. So that gap between your income and what your costs are on a day-to-day, week-to-week, month-to-month basis is going to widen for people. So I feel that personally. One of the things I'm doing at the moment is trying to work really hard to reduce my costs. I was very fortunate in that I got a price cap in terms of my energy, which doesn't end yet. But one of the things I've not managed to do is I don't have a water meter on my house. And I'm desperately trying to get them to fit a water meter, because that would basically halve my water bill overnight. So it's those kind of practical things. If you look in terms of the information that we have and the content that we have, we're not just trying to talk, as I said earlier on, in really theoretical kind of blue sky perfect worlds. We're trying to get people to think about the practical decisions that they can make in this really challenging, really tough time. And it won't be forever. But, if you look back 15 years, there were some really tough times in 2007, 2008, after the financial crash. And it's just really important that people engage with it. And the sooner that they engage with it, the better. And that's part of that process. And it is a process. It is a journey. I'm kicking myself for not having water meter put on my house last year. So I'm really annoyed with myself over that, because that's the kind of person I am. On the good side, I've got a price cap on my energy for a little while longer. So one balances the other. But yeah, we understand that lots and lots of organisations are not in a position, some are in a fortunate position where they can give a pay rise. But the kind of level of inflation we're seeing, we've not seen for decades. So it's not easy for organisations to meet up the difference.
Yeah, there are lots of similar comments saying that people in different organizations say that some of them are giving pay rises but are not aligned with the cost of living rising, because budget doesn't allow that. But yeah, I think especially the public sector is not offering as much as other maybe private organizations are. But yeah, it seems like it's a challenge for most of the people who comment in the chat.
And I think one of the things to think about in terms of your financial well-being, for a lot of organisations are really good at having things like great employee assistance programs. They've often got a really strong health. They understand health well-being. And I'm not saying people don't understand financial well-being, but it's a newer concept. So organisations haven't had as long to prepare and get it into the position that perhaps their employee assistance program is, or perhaps their health and well-being, physical health, I mean by that program is, or even perhaps mental health. I know when I used to go out before the pandemic 2 or 3 years ago, we saw a lot of companies were putting a lot of focus on mental health, but not quite so much on financial well-being. Now that's evened out, partly because companies have realised, and organisations and partners have realised, that one of the factors that undermines people's mental health is if their financial well-being is poor. So if they've got financial difficulty or financial stress, or they've got creditors chasing them, they come home from work and there's a red letter bill on the doormat, or getting texts or phone calls from a creditor saying you're in arrears, that's not good for people. It really undermines their mental health as well. So as Paul kind of mentioned right at the start, I think it's kind of looking at this position in a holistic viewpoint and seeing how we can add in, what we provide can add in to what a lot of employers, a lot of HR professionals are already providing to their organisations. But there's definitely gaps, and there's definitely things that we can add in and build onto. And we work with, I know I saw earlier on in the conversation today, in the chat today, we work with some other organisations. We don't just work by ourselves. So there was a mention earlier on of the Greater Manchester Good Employment Charter, who are doing some fantastic work across Manchester. I know lots of you have a relationship with them. Really great organisation, Ian and his colleagues. And we've done lots of work with them as well, because we see them as kind of complementary to what we do. One of the ways I describe it, and I know there's a couple of you on the phone call will probably smile at this, but I describe what we do as kind of Woolworths pick and mix. You can take from us what you need as an organisation. It's not a one size fits all. And what we're trying to do as well is build a relationship with you that lasts, so you can engage with us on key challenges, on key information, get involved in the strategy of financial wellbeing for your organisation, and also get involved in the updates and the information that we provide. Now, there's a limit today to what I could talk about, and I haven't gone massively into the strategic function of what MAPS does, because we wanted a big focus today, and the feedback from yourselves, the ambassadors, and from Paul and Rebecca and other people who'd recommended me to speak today, was really about the more practical things today. But when I speak to organisations one-on-one, that tends to be what we also look at. We're looking at kind of how the strategic financial wellbeing position can be built within your organisation, improved and developed.
Yeah, no, that's absolutely it absolutely hits it squarely on the head, James. I think I'll just share a little brief experience about even those organisations that have really powerful and substantial EAP systems, like one of the global organisations I previously worked for. One of the issues, even in those scenarios, are enabling your people to trust in them, so they don't come forward necessarily. So you might have those tools and techniques available for your employees, but actually the real key point is getting them to use it and getting them to trust in it. So it's helping signpost them to the right place. And as you pointed out and shown us through these tools, through MAPS, then they can do that for themselves. They can do it from through the organisation. They can do it through links to the existing EAP systems. There's multiple ways of accessing this, which gives them ownership of the issue, and that, I think, goes a long way in making it worthwhile for each individual employee, because it is tailored for them. It's their issue, and it's something that if you can signpost them and give them that support, and as you point out, it's very impartial, then it's got to have a positive effect and ultimately generate great outcomes for everyone who utilises the tools. So thank you again for everything that you've presented this evening. Is there any more questions before we just ask one more via the mentor?
Not at the moment, Paul, but there are lots of positive comments. Lots of people are taking a lot away from the session, and I think that lots of people who want to speak to you, James. So I think you'll get contacted by a few people. So yeah, maybe some people, I don't know, maybe some people want to share some confidential questions or just want to share with you privately. So I understand it's a very delicate matter as well.
And we understand that, and that's why my email's there. Some people will just want to have that conversation with me one-on-one and see how we can help strategically, and that's absolutely fine. And yeah, that's what the email is there for. So I've got a really busy day tomorrow, because I'm seeing, as I said, with Manchester Credit Union and Greater Manchester Chamber of Commerce in the morning, and with Lucy and her team, Lucy Doherty from Auto Trader and her team in the afternoon. But I will, anybody who emails me, I promise you I will get back to you, even if it's not tomorrow and it's Monday.
Thank you. That's absolutely fantastic. And thank you, ambassadors, again for helping us navigate through the questions and the chat function as you have done. Okay, so what we want to do is just run another Menti poll, if you don't mind. So again, for those of you who were with us earlier, if you hover over the QR code with your phone, it'll automatically take you to the question that we're going to ask. and you're going to have a range, a numerical range that we want you to consider from the question that's posed. Alternatively, if you have your laptop available, if you can open up one of your search engines and drop it into the URL. If you look up menti.com and enter the code number, again, you will be able to participate in the survey. So I'm just going to leave that on for a few more seconds longer, and then I'm going to hand you over to Theodora, who will take over and monitor the results as they come in.
Paul, do you mind monitoring the results yourself, just because my internet connection is unstable and it just keeps kicking me out? Sorry about this.
No problem, Theodora. That's absolutely fine.
Thank you,
I'll
Paul.
move over to the page now. So let's go and see what's happening. Okay, hopefully. It doesn't look as if there's much activity. Here we go. Wow, fantastic. So for those who've voted and do continue to do so, so the code is up at the top there, 8283-9447. Well, the question I posed, James, was would yourself and your organisation be considering taking action as a result of tonight's session? And it's a score out of 10. So if you were to score a 0 or a 1, you would be strongly disagreeing with that comment. If you were to score up at the 10s, you strongly agree. So what is fantastic for those people who've taken part in the poll, they want to take action. They feel what you've presented this evening really underpins something that they, if you weren't thinking about it already, you have actually made them sit up and take notice of that. But also, I think equally as important, those who have come along tonight who really are thinking about the financial well-being for themselves and their employees have got something really positive from the session. So if anything underpins a session that's been well delivered, I think this Mentimeter does exactly that. So again, thank you again, James. Any comments on that from your side?
No, I think, first of all, thank you. It's good to know it was well received, and thank you for all the positive comments. And I could see a few of you I know. Amy, I didn't have a chance to, Amy Lee, I didn't have a chance to reply back to you, but thank you for your comment. I think it just shows, how important a topic it is at the moment, and how organisations are strategically trying to improve their financial well-being offer and build it into their processes as strongly as they possibly can. So, we have lots of information and support and tools and assets that people can engage with. And also the other bit I just try and stress is we are really trying to create, a relationship with organisations and a mutually beneficial relationship. One of the things, I'm very keen on is that you don't feel that I'm bombarding you or knocking down the door. I come to organisations with what I think is appropriate and of interest to them. And we don't run a campaign every single month, because otherwise it would just become a little bit wearing and it loses its impact. So we really focus on what we think are the key issues around money, around pensions, around financial well-being, and around the support that we can provide. And as I say, there's a good number of people on here already who I think we work with really strongly and have a good relationship with, but I'm sure we can build that out with lots of other people as well. So thanks for the feedback, really appreciate it.
No, and thank you everyone for taking part in both polls, the one at the beginning and this one in particular allows us to get some of your feedback on the content and how that content's been delivered, and we will use that for future reference and hopefully provide similar events which are going to support our network and beyond. So so thanks again, James. I just want to finish off the slide deck with a bit more information about what's going on at CIPD Manchester, but we also like to finish the evening with some networking, and you're absolutely free to join in. So I will run through the rest of the slides, which is only one or two more, and then I'll stop sharing, and anyone who wants to remain and introduce yourself and have a chat with James, myself, and the rest of the team here at CIPD Manchester, you're more than welcome. And if there's anything you want to share with us about future content, again, we want to give you that opportunity to do just that. So I'll just finish off the slide deck. Just a reminder about where you can find up-to-date information about CIPD Manchester and CIPD in general, and more particularly some of the events that we are running in the not too distant future. I think I mentioned the diversity and inclusion panel event next week with Peter Cheese, the chairman of the CIPD, sat on that panel and answering questions on organisational diversity and inclusion and how to make that impactful for you going forward. And then next Saturday is the student conference, which is an online session, but will be followed up during April with a supporting event face-to-face here in Manchester City Centre for our local student community. So let me just move on again. We will, for all attendees, send out a survey, and again, it's all about helping us help you. So as you joined the session this evening, for those who were early attendees, we are constantly looking to try and create a content and delivery format that really engages you guys and make sure that you keep us on our toes in delivering what you require. So we are here for you. So again, help us to help you. Fill in the survey. My next Wellbeing event is a face-to-face event. It's at the Novotel Hotel in Manchester City Centre on the 28th of April, kicking off around about 5:30, between 5:30 and 6 o'clock arrival time. And would you believe, even though it's a wellbeing event, we've got a comedian stroke magician who is going to talk to us about achievement recognition and how we can use that as the basis and foundation for our own well-being. So some really interesting tools and techniques in a very practical and enlightened environment. So everyone will be welcome. Keep your eyes out and your ears open for details around that. Certainly through my social media, you will see that appear in the early part of April, and we'll continue to push that event throughout the month until we get to the event with John. Anyone who's seen John in the past, well, I'm sure you'll be attending because you know how great he is. And those who haven't, I really do advise popping along and having a really relaxed but an interesting take on well-being and how we can look at it through a different lens. So looking forward to hosting that event in late April. Just a reminder again of the flipbook, and let's stop sharing and let's remain together. Those who wish to depart, absolutely no problem with that. Everyone who wishes to stay, then you can introduce yourself to the committee. We'll introduce ourselves to you. And James is remaining with us for any one-to-one questions you want to ask. But it's an open network event. We will talk about what you want to talk about. So I'll see you on the other side. 1 second.
Okay.
Well, thank you, everyone. First of all, thank you to attendees, those people who've took the time out in an evening to pop along and see the event hosted by CIPD Manchester, which is very much, and I think credit to you, James, and a thank you for mentioning some of the ambassadors who've taken part this evening. I can't do these events without the support of the team around me, and they're just a fabulous team. So thank you to them as well. So the attendees, the ambassadors, and last but by no means least to yourself, James. I find it really interesting. I mean, these new slides, obviously, that I've not seen either, but the content is just so insightful, and there's definitely lots of things that I can take away personally and professionally that I can use for myself. So thank you again. But who wants to go next? Anyone else want to thank James and introduce themselves, and anyone who comes into the networking event, if you want to open up your mic, open up your video, let's see who you are and let's have a chat.
Paul, just one thing, sorry. Do you want to start recording or do you want to leave it running?
I'll stop recording. I think people more likely to speak.